Alright guys, so welcome back to this module, still on market structure. Alright, so we'll be diving deeper on market structure, and don't forget to recap on the previous slide. Market structure is simply the direction of the market, either over a period of time or the current trend that the market is going. Alright, so in this particular module, we'll be diving deeper, showing you basically what higher highs and higher lows are, what lower lows and lower highs are, and then most importantly, what change of character is. Alright, what change of character is, because these are the things we use to plot our trade right in the chart. Alright, so let's go very quickly. First, we'll be looking at downtrend scenario, and I'll be explaining what lower lows and lower high is. Alright, I'll be explaining what lower lows and lower high is. Follow me very closely. So if we look at this particular trend right here, we'll see that the price is moving in a downward direction. Alright, the market is moving in a downward direction, something like this. If you look from your left hand side right here, you see that price is moving downward. I hope you can see that. Alright, but the downward movement consists of some things that we need to know as a trader. Something we need to know as a trader. Alright, let me zoom out so that you can probably see closely. Alright, okay, so the first thing we'll be looking at is what forms a downward movement, a downtrend, which is lower lows and lower high. So for example, this zone right here, this is a high, that zone right here, you can say that that place is high. It's most like the highest point in the market. Alright, that zone is high. We have another zone here, right here. I hope you are seeing what I'm doing. This zone right here is what? Is low. Can you see it? We have the high up there and we have the low right here. Then we have another one right here, which is also a high, but this high is lower than the previous high. So this high, we call it lower high. Alright, we call it lower high. Let me just write it out so that you get to understand better what we are currently doing. So what we are doing is identifying lower high and then lower low. That's what we are identifying for a downtrend. Alright, so this is what we are doing. We are identifying lower highs and lower lows for a downtrend. So we have something here also. You can see this place. This is also a low, but this low is lower than the previous low, so we call this a lower low. We have another high again. This is another high right here, but we see that this high is also lower than the previous high, which is the second high, so we call this a lower high. We also have something here again. This is a low right here, or let's pick here. This is a low right here again. This low is lower than the previous low, which is the second low. We call this a lower low. Now, the combination of lower highs and lower low is what gives us a downtrend. Do not forget that. I can continue showing you. As you can see, the way I'm marking it out, there's another high here, there's another low, there's another high, another low, like that, like that, like that. So those are signs that we look out for to identify a downtrend. Okay, to identify a downtrend. Are we having lower highs and lower lows, or we are having higher highs and higher lows? As long as we are having lower highs and lower lows, we are in a downtrend. All right, we are in a downtrend. And why are we identifying the trend? So that we can know whether we will be buying or we will be selling. We are day traders, we are not the market makers. Or how can you possibly move the market with your $10 or $20 account? All right, there are people who are trading millions of dollars and billions of dollars. They are the market makers, like in institutions and banks. All right, so we want to follow whatever they are doing. Once they are moving the market, we want to follow their move. That's why we want to identify the structure. Okay, so right now, let's go to a scenario of an uptrend. All right, this is perfect. Just the opposite of the downtrend. If you're a smart learner, you should know already what we are about to do. So let's quickly mark that out as well. So we have a low, right? We have a high right here. Let's pick it from this zone. We have a low right here. This is a low. We have a high right here. This is a low, this is a high. If I zoom it out, you will see very well. All right, this is a low and this is a high. Let's continue. You should be marking with me with your eyes if you are a smart learner. All right, this is another low right here. Let's move, let's move, let's move. This is another high right here. Let's move. This is another, okay, so this is another low right here. This is another high. This is another high right here. Okay, so lastly, let's mark another low. This is another low right here. Where is it? Okay, so this is another low right here. If you look at the formation of what I just marked out, you will see that the price is creating higher highs and higher lows. Now, if you look at the formation of our downtrend, let me just move this to where we are working. All right. Okay, so if you look at this direction, we are now no longer working on lower lows and lower highs. What we are doing now is we are working on, let me just okay, so we are working on higher high and higher low for an uptrend. All right, do you get that now? So this is the formation for an uptrend. We want to see the formation of higher highs and higher low. So what we have right here, this low right here, this is a low, and then this is a high. Then continuing, we have another low, which this low is higher than this low. So we call this a higher low. We call this a higher low. All right, we call this a higher low. You would have understand what I was talking about when I was teaching on forex terminologies. All right, because by the time you start trading, nobody will be talking like a moron to you, or you don't expect a trader to be talking like a banker. So we use terminologies to explain whatever we want to say in the market. So when somebody is telling you get your entry on the next lower low or your next higher high, you already know what they are talking about. So if you look at this low again, this is a low, but it's higher than this second low. So this is higher low. All right, if you look at this high again, this is high, but it's higher than the previous high right here. So we call this higher high. If you look at this low again, this is low, but it's higher than this previous low. So we call this higher low. If you look at this high again, this is a high, but it's higher than this previous high. So we call this higher high. All right, that's just the formation of uptrend. Sorry, formation of uptrend when you see higher highs and then higher lows, just like this. All right, just like this. This is the formation of an uptrend. And the third trend direction is not important, which is the consolidation. It's neither creating higher highs nor creating higher low. That's why I said we don't trade it. We just stay out of the market. Whenever we see something like that, we do not trade it. We do not trade it whenever we see price moving in a sideways movement. We do not trade it. Just stay out of the market. So when the price is creating lower lows and lower high, meaning in a downtrend, we look for a sell opportunity, just like this. We look for opportunities to sell because we see that the price is coming down. We look for opportunities to sell. And whenever we see price creating something like this, meaning price is creating higher highs and higher lows in an uptrend, we look for opportunity to buy. Don't forget, we want to follow the market makers. We want to follow the market makers. We want to follow the market makers. This is the simple way we can trade that our fund will be secured and our win rate will be increased. Alright, don't do over sabi, just follow the principle. Follow the principle. When price is moving upward, you look for an opportunity to buy, and when price is moving downward, just like this, you look for an opportunity to sell. You look for an opportunity to sell. This is what market structure is all about. This is what market structure is all about. Understanding the direction of the market. Understanding the direction of the market. This is what market structure is all about. All right. If you go to lower time frame, the principle is still the same. Let's say we go to 15 minutes. All right, the principles are still the same in identifying market structure. You can see this is clearly an uptrend, and then if you scroll backward, from here, you can see this is also a downtrend. Let's look for a more clearer downtrend. The network is slowing us down, but the principle is basically the same. Very simple, very simple. All right, very simple. All right, so this is clearly a downtrend. As you can see, this is clearly a downtrend right here. So that is all about market structure. So let's move to the next one, where we'll be dipping deeper into forex trading. I will see you there.